Welcome to China Gateway 360, connecting global businesses with China through insights, opportunities, and trends. Today, we're unpacking China's mid-scale hospitality pivot. Let's get right into it. Take a look at this number, 90%. That's a massive piece of the pie. It represents the share of China's hotel demand that is generated entirely by domestic travelers. So what does this mean for you? It means that to really succeed here, the Chinese consumer absolutely has to be your baseline. Yes, inbound traffic is a fantastic, high-value bonus, but it just can't be treated as the foundation of your strategy.
And this domestic dominance, well, it's driving a massive structural shift, a true mid-scale boom. This is happening right now thanks to a convergence of two major tailwinds. On the domestic side, cautious consumer spending means we're seeing a lot of travelers trading down from pure luxury. At the exact same time, you've got these new visa-free entry policies bringing in a fresh wave of inbound travelers who are specifically hunting for reliable value.
The market data totally backs this up too. According to the South China Morning Post, the mid-scale to upper mid-scale tier has literally been the fastest growing segment in the world's second largest hotel market for 3 consecutive years. It is consistently outperforming both the budget and luxury sectors. No contest.
So this dynamic creates what we like to call the target zone. Think of it as a strategic sweet spot. It's exactly where domestic expectations for mid-scale pricing perfectly intersect with inbound expectations for Western service standards. Smart international brands are aggressively expanding into this specific overlap so they can capture both of those key audiences at once.
China Gateway. Gateway.
Your gateway to business in China.
Now, here's the real structural advantage for global players. Foreign brands are actually commanding a 15 to 25% rate premium compared to domestic budget chains, even when they're in the exact same location. And the crazy thing, that premium isn't coming from fancy luxury amenities. It's purely driven by the brand promise. We're talking about rigorous standardized training and strict quality audits that guarantee the guest a consistent experience every single time. Pulling this off requires a very specific 4-move playbook. Move number 1 is geographic selection. You actually want to bypass those heavily saturated Tier 1 city cores, where average occupancy rates are hovering around the low 60s anyway. Instead, your expansion should target highly connected Tier 2 regional hubs, places like Chengdu and Hangzhou. These cities offer incredibly robust business demand without the bottleneck. Move 2 is structuring asset light. Look, owning real estate carries a heavy capital burden, right? By leading with brand licensing, franchise agreements, or management contracts, you let the local partners carry the property risk. This is a game changer because it allows foreign brands to achieve rapid, scalable expansion without being dragged down by heavy capital requirements. Okay, move 3. This one is absolutely non-negotiable. You have to integrate into the domestic digital fabric. Chinese travelers almost never touch international booking sites, making a localized tech stack mandatory. You need WeChat for direct bookings, you need Meituan to reach those mobile-first consumers, and of course you need Ctrip to capture all that core domestic demand. Finally, Move 4 focuses heavily on execution to protect your margins. The winner in the mid-scale space won't just be the brand that drops its prices the lowest. Not at all. It's going to be the brand that competes on true operational excellence. That means delivering 4-star service consistency at 3-star prices, and completely avoiding that race to the bottom on daily rates. Let's be real for a second, though. This strategy obviously means navigating some actual market friction. Expanding into Tier 2 and 3 cities definitely ramps up the difficulty when it comes to site selection and vetting the right partners. Plus, domestic travel spending is still highly price-sensitive right now. And while inbound travel is definitely recovering, we have to acknowledge that it still sits a bit below those 2019 peaks. Ultimately, successfully navigating this market comes down to one core guiding philosophy: design for the Chinese domestic traveler first, and treat inbound as a bonus. As global brands race to capture this target zone, the big question is, who is going to scale fast enough without compromising the exact quality standards that justify their premium in the first place? That's all for this China Gateway 360. Like and comment to receive materials from us. Thanks for watching, and we'll see you next time.